Hello everyone, this is Xratios Investor. Please note that this video is for educational purpose, and please still do your own research. If you liked this video, please give me a thumbs up and hit the subscribe button. I am very excited to share with you my top 3 stocks picks that I am buying coming into November 2018, that I believe have the massive potential to grow over 50% in the next few years. I will give my take and reasoning on why I am bullish on these stocks. Stock number 1, Disney, under the ticker symbol, DIS. This is the stock that I currently own, and I am planning to own for a long time. We are looking at a blue-chip company that remained dominant in the entertainment industry over the decades, showing no sign of stepping down anytime soon as the giant in the entertainment industry. Considering what Disney owns: Marvel, ESPN+, ABC, Hulu, Disneyland and Resorts. They are a reliable blue-chip company, getting bigger with their recent acquisition of Fox. Looking at the Disney chart for the past 3 years, Disney is stuck in the neutral, peaked at $120 and is currently sitting at $114.90 at the point of time as I made this video. Disney has a trailing PE ratio of 14.49, which is lower than the industry average PE ratio of 21.71. The lower the PE ratio, the more undervalued they are. Disney also pays dividend twice a year of 1.47%, which means for every Disney share you own, you get $1.68. Disney generates most of its profit from their blockbuster movie studio as well from their theme parks and resorts. Of the top 10 movies, Disney topped the current box office of 2018, claiming 5 of the top 10 spots. Thanks to the success on the big screen, their operating income at the segment has quadrupled over the past 5 years and now accounts for 16% of the company's total operating income. What's more is the fact that Disney has been raising their admission cost for the 30th consecutive times, but still see an impressive 5% increase in the most recent quarter, propelling revenue to 13% year-over-year. And I don't see that trend stopping. Although Disney had a mixed result in their third quarter 2018 earnings, a large part of that is due to post-21st Century Fox acquisition, causing Disney to absorb the $14 billion debt that Fox carries along with the assets. Which is why many investors will keep a close look at Disney's scheduled fourth quarter fiscal report on the November 8th. But here's the biggest reason why I am so bullish on Disney right now. Disney plans to launch its own streaming platform in 2019, dubbed as Disneyflix in the Hollywood circles. I truly believe that Disneyflix have the potential to become a top competitor in the streaming service industry, going head-to-head with Netflix for viewing time. As we all know that content is king, and Disney is proving to be exactly that, as they have the right game plan and content. Disney owns 30% stake of Hulu, the third most popular streaming service, and set to increase their stake to 60% through the acquisition of Fox. Disney also have a wide range of popular valuable properties, including Star Wars franchise, Marvel Library, as well as Fox properties such as Deadpool, X-Men series, National Geography and other Fox properties. CEO Bob Iger has also stressed that the company is looking ahead to a future where people increasingly get their entertainment over the internet rather than through a cable box, which is what the Fox acquisition is really all about. Which gives me more reason to believe that Disney is well positioned to become the streaming industry powerhouse. Disney ticks all the boxes for me with exciting future ahead, strong fundamentals, and strong movie ticket and theme park admission sales. Please note that their upcoming earning report will be released on the November 8th, and I will be looking to add depending on the outcome. Stock number 2 that I personally like a lot, Nvidia, under the ticker symbol NVDA. For those who don't know me, I am an investor who looks at 3 main criteria: the future outlook, the fundamentals, and buy low, sell high, and Nvidia fits these criteria perfectly, especially with Nvidia dropping over 30% from its peak. Before moving on to the reason why I am excited about Nvidia, let's look at the chart. At the point of making this video, Nvidia is at $185.68. Nvidia has seen an increase of 1,300% in the last 5 years, with all-time high priced at $292.76, and recently dropped by 32% to $176.01. What we saw from the sell-off is largely due to the concern of a trade war with China. Which is why the price is becoming more appealing to me. The PE ratio has dropped to 30.73. It's also worth knowing that Nvidia have crushed the last 4 quarter earnings. With percent surprise of 41.49 in October 2017, percent surprise of 55.45 in January 2018, percent surprise of 27.89 in April 2018, percent surprise of 7.27 in July 2018, and I would not be surprised to see a strong earning on the upcoming earning report on the November 15th. Now, what excites me the most is Nvidia's direction towards artificial intelligence. Don't get me wrong, graphic cards remains as the main focus for Nvidia, as Nvidia monopolized the market with a huge 69% of the graphics card in the industry. What's more is the fact that most reviewers rate its product, proving that Nvidia is still the best in the industry. Nvidia's autonomous business is expected to rise and grow at an annual pace, in excess of 60% between 2020 and 2030. Nvidia has tremendous potential in the market because Nvidia is already well positioned in the industry to capture its fair share of that market with deals like Audi, Mercedes, Volvo and many other automakers in hand. While the revenue of Nvidia's automotive business only hits a new record of $161 million, but I believe that the automakers' deals will only drive the growth remarkably over the next few years. I reckon that the artificial intelligence is going to make Nvidia a long-term winner, because to manage artificial intelligence, a huge computing power is needed. Nvidia's GPUs serve just that, to make artificial intelligence a reality. What's more is the fact that artificial intelligence is already playing a vital role in our lives, as we relied on forms of AI technologies such as Alexa and Google Home. I believe that Nvidia has a good future, but I do need to remind you not to get overexcited due to the fact that Nvidia have a few competitors from Apple, Alphabet, and Tesla. CEO Elon Musk even claimed that Tesla's own chip is 10 times faster than Nvidia's technology. So, I think this is something worth looking at to see how things will further develop in the next few years' time. But for now, it is definitely an interesting stock to keep an eye on. I am going long-term in Nvidia, and will be averaging down if the stock drops in case the tariff war turns from bad to worst, although I think it is highly unlikely. My third pick, a more controversial pick, Aurora Cannabis under the ticker ACB. Yes, you heard me. I came really close in picking Canopy Growth and Afria over Aurora. But I opted for Aurora because I realized Aurora price is back to where it was a few months back despite making progress, and could have a potential deal with brand company. In my previous video on why marijuana stock crashed, Aurora explained. If you have not seen it, I have added a link into the description box below. I made my point clear, and you would know that I am a long-term investor for Aurora. Currently Aurora is at $6.15. Down of 50% in just 2 weeks as the cannabis sector entered the correction phase, which could possibly still go on. So, why did I pick Aurora, especially when the cannabis market is crashing? Because I believe that Aurora is currently a bargain. I am not saying that it won't drop any further, but I believe that this range presents a good buying opportunity. Aurora is currently risky and is overvalued, yet this could change depending on the future earnings as well as the earning reports on the November 8th. Although I must say that it will take a long time for the future earnings to settle in before we see growth. However, the biggest reason why I am bullish is because Aurora is well positioned in the market due to the impressive production capacity that will generate huge revenue and earning growths. Aurora management has reiterated that the long-term future performance of the company lies in the medical cannabis market, rather than recreational pot. The cannabis industry is a very new sector, and the trend for many years will be the adoption of medical marijuana as an allowable treatment option, and legalization of marijuana in other countries. What's more is that there's possible supply shortage in Canada, further proving that this industry is indeed in demand and profitable. And I believe that Aurora will be the few companies able to supply to the growing global demand. I will be doing the same for Aurora by averaging down my buy as the bottom is indefinable. I would also like to spend some time talking about India Globalization Capital to show you why it is important to do your due diligence before buying any stock, because what you hear from people sometimes can do more harm to you than actually help you. I want to see my viewers to become successful, and I hope to share this sketchy stock. India Globalization Capital Inc., under the ticker IGC. Despite being in the New York Stock Exchange, the India Globalization Capital has substantially discontinued the business that it conducted at the time it was listed, and has become engaged in ventures or promotions which have not developed to a commercial stage or the success of which is problematical. It will not be considered an operating company for the purposes of continued trading and listing on the exchange. It went from $13 all-time high within the space of 1 to 2 months to almost nothing. IGC had a lot evident red flags that investors would have known from research. For example, the sketchy-looking headquarter that does not reflect the stock's capabilities to develop commercially, or working with a manufacturer in Malaysia despite the fact that the country has no medical marijuana program. All this information could be found from research, and I think it's really an important lesson for people to understand. As always, please exercise the stock with caution as we might not know what will happen in the future. And please still do your own diligence and research before purchasing a stock despite my research and speculation. That's all I have for this video. Subscribe here for more stock videos, and leave a thumbs up if you like this video. Comment down below and let me know what you think and share your top 3 pick for November 2018. Till next time.